back to another YouTube video here with me, Lewis. And in today's video, we're going to be going over why order blocks don't work. And essentially, there is more to supply and demand than you may have been told. So you're going to want to stick around and watch this video because it's a very insightful video, a video that very much transformed my personal trading. So before we get started, guys, hit that subscribe button and hit that like. I know you guys are enjoying the content, and if you want to see more, you must do those things to show us that we know you are enjoying it. So, order blocks. Well, reading that, you're probably thinking, what is this guy on about? He's a supply and demand trader. He trades order blocks, or at least supply and demand zones. Still more to it than that, right? Because essentially we are taught that the perfect supply and demand zones are these beautifully positioned zones that are this bullish engulfing, that engulf the previous candle, that look so beautiful and pretty. But sometimes, and I'm going to show you exactly what I mean, that just doesn't work, right? And there's a different understanding to what does work, and I'm going to be sharing that with you today. So we're starting here on price action from Euro USD. It's a great few examples that I've found to portray my vision. So now, if you have traded order blocks before, if you have some understanding of order blocks, well, you might mark out this zone here, right? And just think that this is your supply zone. Now, this may very well hold, and this may very well be your supply level, and that's great. You may take a short from that level, right? However, I'm using more of the logic behind it, and I'm asking myself, what is the purpose of a supply zone? Well, essentially, banks are using buy-side power to induce and liquidate levels of liquidity, and in order to do so, they have to first send you left so they can go right. They have to send you up so they can go down. So you have to understand that they're using their buying power to do said thing, and in order to then bring those buy orders back into a break even so they can continue their momentum to the downside, they have to mitigate the level that they brought, right? Not the level that they sold. So we have this thing called demand and supply ranges. And these ranges are areas in the market where you very clearly can see the banks have built up positions, usually in the form of buy to sells or sell to buys, that have taken levels of liquidity, right? So let's use the first example. Okay, so we have one zone down below, and then one zone here. So the first zone would be based off, you would take your entry here, stop loss here, right? And the second one would be based off, you would take your entry here and you would have your stop loss above, right? So bear in mind, guys, we don't actually trade this time frame. And if you do trade our time frame, or if you are interested in trading our time frame, of course we have our course and etc. etc. But we use these as points of interest that we trade down from on the lower time frames to get higher risk to rewards, right? This is just to portray a point because this is absolutely relevant to every time frame. So there are your two levels, right? Now, let's just play price, right? There is no right or wrong. There just is, right? And they're just my perceptions. So the first one is instant tagging. Great. And then essentially, well, you got stopped out, right? The first one gets stopped out, and the second one stays in. Now, a lot of traders will be looking at that, but, well, now the supply level has been broken, it doesn't make sense anymore, blah, blah, blah. Well, no, actually, look at the structure, right? Because structure is king. This high, put in this low, and it's still being protected. As long as price melts, which it does, it's protected, right? And so then some of you traders are looking at this and you're going, oh my God, that's such a cute, beautiful little supply level. and short, whilst it is, I'm actually more interested in the buy to sell that took levels of liquidity. So that includes this, but the actual range that the actual range that used the buying power to mitigate this level and then to sell off, right? Not to say that this perfect little zone won't get tapped, and sometimes they do, and sometimes it's very beautiful and clean, and that's amazing, but it's the truth, right? And here I want to use another example. How many of you traders would be looking at just taking this level, this beautiful level, it can only take this level, when in actuality, this whole level, and now it's, especially when you're using it as areas of interest, because inside of here, for us, we need to wait for an M15 realignment and blah, blah, blah. So this is based off our strategy and the 4 hour. This is my overall level that I'm interested in waiting for reactions to take place out of. Why? Because it is a purposeful buy to sell. It's purposeful buy to probably induce some levels of liquidity or mitigate out of this breaker block to sell. You might not get the perfect tap-in of the whole zone. All right, and now you would have missed trades because we've tapped in, we've changed out, we've realigned, we've came back up to mitigate this wick, which on the 15-minute is probably a level of supply, and then continued. And you've missed out because you was waiting for this pretty little zone to be mitigated, right? And so that's essentially one of the biggest points that is I want to make, right? And I mean, there's another perfect example right here. The cute little zone is this, but the bandwidth of the volume that's come in from the BFIs is in these wicks, right? Is in this overall buy to sell. This is the buy to sell, not this small little thing. Now, you can have them both marked up if you really want, because they both do, like, you know, they both do hold relevance. Sometimes they do tap in these zones, but a lot more now I've been using ranges, and it's just really helped my trading, my personal trading, to be honest. So just forward and price. So we already have liquidity curated. I did pre-plan the portrayals of the video. So first thing is that the level has tapped, right? And hits produce a reaction that hasn't yet taken out this level of demand. And now we have building liquidity. I really like it when my point of interest first have a not so deep tap-in, more of a shallow tap-in, and then have some reaction, because that induces the early smart money. And essentially those will end up being swept out as liquidity at some point or another. And especially when traders are looking at this, and they're looking at this as such a beautiful zone to take trades out of, knowing that we have rest and liquidity, we have a liquid area above here, we have levels of supply that need to be mitigated, and thus far we haven't really broken anything structurally. So we could just come and mitigate levels of demand and take out levels of liquidity, right? And in the process build more liquidity and come and tap our zone. And as you can see, right, if you was to take a trade out of this zone and for whatever reason have your stop loss so tight, which of course some traders do, because you're thinking it's just the zone that's supposed to hold. But it's not just the zone, right? It's like the range. There is levels of liquidity, and as more and more smart money traders get into these markets, more and more liquidity opens up at those levels. Overall, in and around here, the algorithm will pick up on the changes that need to be made. And so there's another prime example, and that's just a huge sell-off, right? And Okay, just if there are any more examples. Right, and there is a beautiful example of where price mitigates a level perfectly. Now, what's interesting about this level is, well, this is the buy that took the liquidity, right? If you actually look at the sweep, the level of buying power that was finally deployed to take out this high was in this wick. So it absolutely makes logical sense why this would just be your zone, right? You wouldn't want to use this whole thing. It's like, no, the levels of liquidity got swept here. It's all about liquidity. Liquidity is a huge part, right? And then again, we can see that we have this buy to sell off. Just using the overall range is something that I would personally mark up. Wouldn't need to mark up this all. But these higher levels, yeah, like, I mean, I'm not sure actually how price plays out from that point. It looks like it just kind of melts and melts and mitigates out of another range, right? Not just staying within the zone, but even still, that is my range, because this level here is the buy to sell, right? This buy to sell didn't take out any level of liquidity. Okay, and so now you can see, I mean, price might just genuinely come up, but this level now gets swept, but the overall range still hasn't been swept, right? And okay, very well could just go and sweep now, but you understand my point, right? Same again, right? It's like all about the logic of where the levels are. Okay, well, we have what? Tons of built-up liquidity, right? The area that brought to sell. That is a range, right? That is a buy to sell move. It's all about essentially areas of liquidity and areas of orders, right? It's like, where did the orders get stacked? Simply put. Yeah, I think I made my point. I think you guys understand exactly what it is that I am portraying, right? Here's another prime example. Nobody takes this small little zone alone and be a perfectionist, which is what I used to be. For me, it's the overall range, right? It's the sell to buy. That's how I look at it. And sure, sometimes the cute little zones work amazing. And I do still use zones in and of themselves, but understanding the importance of the actual range also in of itself. Right? Let's see. Understand price action from here. You can see I want to give you another example because there is another example that exists, right? The prime example would be that everyone would want this tiny little wee zone to get mitigated, but it's the buy to sell range that gets mitigated. And we were able to take amazing trades out of this level. Another one again, right? Everyone was probably waiting for this exact zone to get mitigated, and it didn't. But the buy to sell range did. Granted, yes, it gets swept once, but understanding that, like, I was still in levels of trades in this range, right? There was a good few trades that we took out of here. There was a 30R short that was given to signal members in this level, and then we sweep back out, and then this huge sell-off. So I've portrayed my point, right? There's essentially more to it than that meets the eye of just the perfect order block. There are levels of ranges, right, that have initiated orders, not just a perfect zone. So guys, with that being said, I do hope you enjoyed the video, and